to us. We have liquidity here to be taken out. We have nice imbalance within this leg, which can be filled, and it's below the Frankfurt opening price. So we have nice sort of confirmation around this level. Perhaps even more confirmation is that this level took liquidity. So we sort of see this as a stronger POI. So it takes liquidity here. It's got inducement, or it's got liquidity here. We're going to touch on these things more later. Below the Frankfurt opening price, and hence this level sort of holds and delivers to the high and takes liquidity there. So yeah, so essentially, we want to be taking buys from below Frankfurt opening price and sells from above the Frankfurt opening price. So that's sort of the most important things to know about the Frankfurt. We've got multiple implications in which we can use it in our trading. I don't really have this sort of rule based. However, it's just like it all forms a part of my bias. So it's used in my analysis for liquidity and what levels are going to sort of play to provide the moves for the day. So, and obviously for Frankfurt opening price, using that as a sort of level for determining which zones are more likely to hold than others, to catch the high probability entries, and be well positioned in the market. So cool. The next sort of session we're going to be moving on to is talking about the London session. So the key characteristics to know about London session is usually the London session, or the London opening price, which I consider sort of the first hour of London session, will typically create the protected daily high or protected daily low, depending on the day's direction. So currently on my chart, you can see the blue boxes. So obviously we spoke about the pink one being Frankfurt. So this blue box here is the first hour of London session. So the first hour is key, since this is the sort of time which is usually responsible for putting in the protected daily high and low, and it's also when usually the sort of momentum comes in. The sort of initial key momentum comes in for the London session. So I'm going to drop the time here. So this is in the GMT timing, so UK time again. So you just have to convert it. But I use 8 a.m. till 9 a.m. GMT. So just this hour of price here. So let's just sort of study. This is just the same price action we were looking at Frankfurt on, but let's just sort of study some movements of the London session. So we can see that as the London price opens, London takes liquidity out and mitigates a level here. But the key thing to note is that, as London session opens, we can see we have this large injection of liquidity into the market here. And then we can see at the end of the first hour of London, this low is put in here. And as a result, this low here has become the protected low of the day. We can see that price comes back down to sort of mitigate this level and continues to hold throughout the day, forming this as the low of the day. So, we can see that, London is responsible for these large liquidity injections. Usually, it's going to sort of take liquidity off some point, and London will technically take liquidity and use that liquidity as fuel to sort of fuel the day's direction. So essentially, in this example, we can see prices took out this high time frame liquidity level. London open took liquidity, and then we had a money transfer off of here, and London low takes liquidity and forms the protected low of the day, and the price closes bullish. That is the sort of daily scenario in terms of London for this day. We can see once again here, the high in London session is the protected high of the day. So throughout this day, this high has been protected, and shorts have just sort of held throughout the day. It's just sort of, you can see in this sort of day of price action here, London, just outside of the first hour, however, still in the London session, it's formed the protected low of the day, which is held throughout the day, where you could have been a buyer along this way, buyer here, potentially following the sort of daily direction, knowing that this low is going to be the protected low of the day. Once again here, you can see as as the London session opens at this price level here, we have a nice sort of injection of liquidity. This is just to take out liquidity, and this, you can see this liquidity. Let me change the color of this real quick. So the liquidity that exists underneath this low here gets taken and is transferred within here, and then used. The liquidity is used to fuel the move up. So London here, London low within the first hour, as sort of take liquidity and use the liquidity to push for the daily direction, and as a result has remained protected throughout the day. Sort of draw a straight line, you can see that this low never gets violated. So essentially, London creating the protected high or low of the day again. And then the same for this example here. London high forming the protected daily high of the day. We can see price, does it violate? No. So there you go. Once again, this high has been respected, and the high formed is the protected high of the day. So you can see that this is a very reoccurring characteristic of the London session. And all this session knowledge we're sort of gathering here, we're going to eventually put together and form what we call the daily cycle, and then from there we can also then talk about the weekly cycle. So yep, and we can see on this day of price action 2, we had a large sweep of liquidity, and then London session kicks in, gives a nice kick of momentum. This high is the protected high of the day, and from here onwards we have a bearish day. And just like what we were talking about earlier on this particular day here, how London is used to sort of kick in that initial liquidity injection with the purpose to take liquidity. Once liquidity is being grabbed, price can then transfer and continue with its chosen direction to take out more liquidity and come to more sort of favored levels by the algorithm, and this low here becomes the protected daily low. So you can see how this sort of theory repeats, and this can be very, very sort of important for entries, especially obviously if you trade London session. When London comes and takes large liquidity, we start to sort of give a money transfer off of here, knowing that this high was formed in the London session, sort of gives us good confirmation this is likely to be a protected high, in which we can then short the market from here onwards, obviously with a bearish bias in mind, potentially to target liquidity levels as such. So just like as example what we were talking about earlier with this buy here, we've taken out higher time frame liquidity all the way over to the left here. We've taken out higher time frame liquidity. This liquidity gets transferred within this level and then used to push the market up to come and take more liquidity out. So you have your bias there to be a buyer. Then putting together sort of other things we've learned. So about the Frankfurt session, so we've took out Frankfurt liquidity. It's below Frankfurt open price. London's kicked in this nice sort of initial injection into the market. This low here mitigates this level within London open. So once we sort of start to see this candle here, this candle closing sort of as a rejection from this level, we start to reject out of this level. You could potentially take a buy from here if you're happy with your confirmation, but we're going to get onto sort of confirmation and everything later on. You could potentially be a buyer from this level to target potentially Asia high liquidity, as well as this trap level here which has been created, which we're going to talk on what identifies a trap layer. So this is sort of potential trade opportunity, talk about the confirmations with all the session sort of theory we've been talking about so far. And the sessions aren't really confirmation, the settings are sort of what we use to put together to form a bias throughout the day, and to obviously like try and get them pinpoint accurate entries, trying to get sort of involved in the market at like correct, good quality pricing levels in which we've got a high probability to ride these levels to the next swing points and sort of capitalize as much as possible. So I sort of covered the main points on the London session. Just jot them down and see I've got them as a note. So London forms the protected high or low of the day. So, that's a sort of key point to know. So next we're going to be talking about the New York session. There's a few key characteristics to the New York session. Once again, we're just looking at the opening price of the New York session. So just the first hour of New York open. So essentially, the key thing to know about the open of the New York session is that it initially likes to sort of trap and sort of take liquidity as soon as it opens, which is usually used to fuel the remainder of the day throughout the whole of the rest of London and up until the end of New York, up to Asia. So let's take a look at this on the chart. So we're essentially looking for what happens at the beginning of the New York session. So as you can see on my chart, you can see these green boxes here. So as we discussed earlier, this blue one's London, pink is Frankfurt, purple is Asia, just like we've been talking about. But these green ones are just the sort of the first hour of the New York session. So I'm going to put the time up here in UK time. So New York session. So 1 p.m. open. So this box is 1 till 2 p.m. GMT time. So taking a look at what the market does here at the open. So you can see how at the open price of New York, price takes liquidity. And then throughout the first opening hour, price comes down and takes more liquidity here. So this essential move here, we can sort of recognize as like a fake breaker structure, since the beginning of the New York session took out this highs. It's more so just a liquidity grab, in which price just wanted to come down here to clear out these two lows here. And then since here, we just have a money transfer and a sort of high probability level to enter yourself could be here. It's got a well priced level in terms of liquidity and sort of the market balance and cycle. So just taking a look at a couple sort of New York sessions. So we can see that on this particular day, we have Asia high liquidity. Looks like there's quite a lot of relative equal highs up here. We can see that the New York session opens around here, and the first sort of push of the New York session is simply to take liquidity. And now once liquidity is being grabbed, the market can continue in the opposite direction into which the New York session opened. So obviously, if New York pushes up, once significant liquidity has been taken, we can expect the market to come down. So essentially, what, to put it in simpler terms, what the New York open hour does is sort of create a trap, a fake market trap. So we can sort of create pushes up, leave behind zones like this. However, since we've had a high time frame drawn liquidity, this zone is likely to trap here. So the New York session likes to create a trap. So going back to the example we're just looking at here, bearing in mind the New York session likes to leave behind a trap, we can see price leaves behind this nice trap level here. So this nice trap zone here, which we can sort of buy up through. So we've got that extra confirmation. We've got a nice build up of liquidity here. We know that this zone is likely to trap since it occurred in the first hour of the New York session. We've had this nice drawn liquidity here, given a strong reaction, and then we've had the sort of lower time frame confirmation entry where we've had a nice sweep on liquidity, paired with a nice sort of build up of trendline liquidity. So this could be sort of quite a high probability entry to take. You can see it goes on to run quite nice eventually. Yes, that's a good example of the New York session. Once again here, we can see the opening price of New York becoming a trap. So New York session opens, we create this push in the hour. You can see how perfectly, as the first hour of the New York session ends, that is where this specific pivot point is. So this first hour creates this fake move to draw liquidity, and it leaves behind a trap zone here. And price comes to take that out, comes and reprices higher, takes out sort of higher time frame liquidity point, which is it's better priced. So when we actually look at this leg of price action here, this entire leg, price comes to take out liquidity here. Since this is a more better priced level, we have a nice strong high here which takes liquidity, and then price continues downwards to break structure below here. So essentially, let's just do a couple little drawings here. So when we're having price action, the New York session opens, pay attention to the opening push of the New York session being trapped. And also pay attention to whether the New York session draws liquidity. So say we've had a higher time frame drawing liquidity, that sort of just gives you confluence that this New York push is going to trap and be taken out eventually. So let's have a look for another example. So we look at that one. Yeah, so you can see here. Well, this is quite a good example actually. If I look to it. So just mark this. So you can see New York pushes up, takes liquidity, and then subsequently continues down, pushes down, come harvest more liquidity and come down to a more priced area. So essentially the demand level, or the low, the low caused in the New York opening hour, essentially is a trap and gets swept out here. So yeah, there's a little bit more detail to touch on when it comes to this New York session. This is another good example